You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time once again for TWIFO. This Week in Futures Options, a program here on the network where we break down all the hot action in the world of the products on the other side of the fence, the futures options. So your crude, your gold, your silvers, your soybeans, your fluid milks, whatever is lighting it up that week, we will break it down. By the way, if you have a vote and you're listening live right now, head on over at Options, cast it. If you have a product you'd like us to talk about this week, clearly crude's going to be on the docket, as it is a lot of weeks because it's just sucking up all the oxygen in the room these days. But if you have another one, maybe something esoteric we don't really talk about here on the program, hit us up. We want to hear from you guys, see what you guys have on the brain. Some of the weirder products we've talked about here have come from suggestions from you guys, so we enjoy that part of the show. You guys pull us into the weeds sometimes, and we do like that. As I mentioned, we are streaming live at 1:30 p.m. Central, 2:30 p.m. Eastern, as we do every Friday here, so you can join us via Mixlr, MIXLR. We do love you guys. Those hardcores of you who are hanging out, haven't kicked off your holiday weekend here, your Memorial Day weekend yet, we do love you guys. Of course, all you guys listen after the fact, we like you guys too. We are all part of the Twifo family. And of course, you can check out all the archives over there, theoptionsinsider.com, or wherever you find your favorite podcast programs, iTunes, TuneIn, Stitcher, Pocket Cast, all that fun stuff. You can even grab our mobile app to search in your favorite app store for Options Insider or Options Insider Radio Network if you don't want to take any chances, and you'll get the app. It's got all the programs. The app's actually a cool way if you're new to really get into the archives, because some of those big platforms like iTunes and stuff, they limit you to 50 of the most recent episodes, something along those lines. The app's got everything. So we've got stuff going back a decade on this network. So if you're just sinking your teeth into it for the first time, check it out. And I do promise one of these days we'll make a best of feed as well to make it even easier to surface some of these great guests and discussions and debates we've had over the past 10 years for you guys. You guys have been asking for it. We'll see if we can get it to you guys. And of course, however you listen, after the fact, live, donkey cart, however it comes to you, hit us up, questions, comments, insights. We do have to hear from you guys at the end of the day. You always have some interesting suggestions for that stuff. And joining me on the old program today, my cohort, my futures options partner in crime, the yin to my yang, Mr. Nick Howard, the founder of Bantix Technologies and the creator of a little platform we like to use around here quite a bit called Quick Strike. Mr. Nick, welcome back to the Twifo program, sir.
Hey, here we are again, another week, another discussion about crude oil. And reminder to everyone, the links are active now on the report, and I also unexpired the week 4 contract that expired today, so you can still take a look at what's going on or what happened this week with the crude weekly option, or I was calling it all week in Twitter, the OPEC option.
The OPEC option, I like that. By the way, I always forget at the top of the show, there's that link out there you guys can follow along the show with. It is cmegroup.com/Twifo, brought to you by our friends over there at CME. And what that does essentially allows you to generate the same reports that Nick and I are using right now, so you can follow along. You want to see what happened this week in crude or silver or lean hogs, whatever floats your boat, you can do that right there, all completely free, which is pretty darn cool, if I do say so myself. And as a nice little added carrot for you live listeners, you hardcores out there who haven't headed out for the weekend yet, Nick and his team have activated those links. So usually when you see the reports, you kind of just see the static numbers. You can't do what Nick and I do, which is click into them to see a little bit more action, like I'm going to do right now in a minute here on the front month. You see that 55 call link there in the front month in crude, listeners. Well, you too now can click on it and do exactly what I do. See how the volume breaks down across all the strikes, which is pretty cool stuff. So a nice little carrot to dangle in front of you guys who can make it and join us live. cmegroup.com/Twifo this week in futures options to do just that. Let's kick it off. Let's get into it. Got to talk crude. It's been pretty much all crude all the time. Even a lot of people I know on the network and in the space in general who don't normally watch commodities were hitting me up about crude this week saying, hey, what's up with crude? What's going on with this OPEC thing? You guys will recall last November was the big inflection point, the big OPEC meeting that really kind of changed everything out there in the crude space. Prior to that, it was all supersized bid for the puts, no bid for the calls, and the underlying was kind of listless. Then we saw that kind of essentially show a little bit of life to crude. It kind of rallied back up. We started threatening the 50 handle again. We saw near-term calls get a little bit of a bid, even though longer-term puts still led the dance. So things kind of sparked to life, and it seemed to change things a bit. And now we have this follow-up meeting here where everyone was expecting the Saudis and the rest of the crew over there to extend these cuts, at least for another year, if not 18 months. And what we got was, I think, a little bit less than a lot of people were hoping for or expecting. They extended it really only about 9 months into Q1 of 2018. And the Saudis even said they didn't see a lot of support to extend it much farther. They also said they did not see a need to reduce oil output farther, which is a little bit interesting given the fact that Saudis have kind of been leading this dance from the beginning. So all of that kind of disappointing. A lot of people led to a big sell-off, WTI dropping almost 5% yesterday on Thursday, and it seemed like the bears were back firmly in charge. We were well south of that 50 handle again, and the future was set. The course was laid. We were heading south. And then today we see a little bit of a rebound here. Some people maybe choosing to buy that dip. It was up about 1%, a little more at one point here intraday. So a little bit of a rally net on crude, even though on the total week, as this is this week in futures options, looking back on the week, net on the week, we are still off about a handle pretty much across the term structure. But yeah, a lot of the months are back at or above that 50 handle again. So that's a very important level. We always talk about it here on the show. That's kind of where the inflection point is for the skew. We start getting south of that. We start seeing vol creep up and a little bit of juice come back into these options as we get into those comparatively meatier, juicier puts. You start getting too far north of the 50 handle, we see vol just vanish. The calls really don't have a lot of juice compared to the puts, and so we don't see a lot of that. So 50 handle is a very important level, and we are still continuing to play that will they, won't they dance. Of course, a lot of other things were impacting that sell-off as well. There's a lot of talk that rising U.S. production. U.S. production is up quite a bit since that cut has even been announced. U.S. production up about 10%, actually over 10%, since the middle of 2016. So people are starting to say, well, what does it matter what OPEC's doing if they're cutting a million barrels a day if the U.S. is up pretty much more than that? So gains in U.S. production could wipe out pretty much some, if not all, of what the Saudis and the OPEC is trying to do here, which also led to that frenzied sell-off yesterday. Also, a lot of talk about U.S. producers can really remain pretty profitable as long as we're in this $45 to $50 a barrel range. So as long as we stay here, it seems like U.S. production can get good. And of course, if we start getting higher, you start getting into that 70 handle range, that's when the shale guys really start kicking in. So it seems like maybe that's a near-term ceiling on how high crude can get in the near term. Once all that production turns on, look out below as all that stuff starts hitting the tape. But a lot of interesting stuff. Let's get into the options. Like I mentioned, we saw a huge spike in vol earlier this week, and then it's kind of coming off as the sell-off has mitigated and actually reversed a little bit. So net here on the week, we actually saw crude vol coming in yet again, kind of a surprising and yet often repeated story here on TWIFO, off about 2.5 points, depending on where you're looking here on the term structure. So a pretty aggressive shellacking of all crude vol. Of course, there was a lot of juice building into this as well because we were heading into that OPEC event, and you know what happens with event risk. The juice comes in. It's like a balloon, and after the event, unless it all hits the fan, that balloon tends to pop, and that's pretty much what we saw out here in crude land this week. I'll let Nick get into the quick skew and all what the things that happened, the vagaries of the skew in a little bit. But first, let me light up what were the hot options out here in crude this week. And number one with a bullet. If you were saying to yourself, I think upside, far upside, well, not far upside, but near upside calls were be number one with a bullet, you were right. You probably surprised a lot of people. It was a double call, 55 calls, lighting it up to the tune of about 55,000 contracts this week, including a big chunk yesterday on Wednesday, 21,000. A little bit of that closing, so perhaps some people giving up the ghost there. But a lot of that net on the week, it was opening of about 5,000 at least of those contracts, if not more. So a lot of turnover on that double strike. People were prepping for the OPEC meeting when it didn't really come to pass. A lot of people hurriedly getting the heck out of Dodge on Thursday. And it seems like even about 4,000 people piling back in today, getting some of that love back again today. So a lot of will they, won't they dance on that double strike. Number two coming out, probably a strike you probably expected, the 49 puts. They were very active this week as well, with about 46,000 of those lighting it up. Again, surprise, surprise, nearly 20,000 going up yesterday alone. So almost half the volume going up yesterday. All that, pretty much a good chunk of that opening as well. 10,000 on Wednesday, so also a good chunk of that opening. So a lot of back and forth paper, but a lot of opening paper on these strikes as well, which I think is worthy of note. Number three with a bullet out there were the 48 puts, kind of a nice little juicy put strip out here. The 48s and 47s both lighting it up. 42,000 on the 48 puts, about 39,000 on the 47 puts. And again, surprise, surprise, the lion's share of the 48s yesterday with about 20,000, also surprisingly, actually mostly opening. 47s doing about 11,600. They're a little bit more out of the money. And they were actually on balance a little bit closing yesterday, which is kind of interesting. So a lot of interesting paper flying back and forth on the put strikes. Calls not to be outdone, the 54s. Also active, 38, about 39,000 contracts here. Now, what you don't see in these top five or so here, which is kind of surprising, is that proverbial 50 handle. That's where everyone likes to play usually. And then this week, last couple of weeks, the double calls have been kind of the strike du jour, which is a little interesting. I'll let you get your thoughts on that in a minute as well, Mr. Nick. But I don't want to give the impression that it was all front month, even though it was about nearly 60% of the action was in that front month July contract. There was a little bit of action a little bit farther out. If you get all the way out to Deece 2017, he had the 60 calls a little bit farther out of the money, lighting it up to the tune of about 13,000 contracts. A good chunk of that opening, including about 4,000 on Thursday and about 2,000 to 3,500 throughout the rest of the week, each individual day. So nice sprinkling of activity going on throughout the week. Someone liking that D60 strike out there as well. If not to be outdone, the hardcores who are perhaps not buying this 70 to 75 handle as a ceiling for WTI, given when the shale kicks in, piling in to the D 2019, par 100 calls, lighting it up to the tune of about 1,411, including about 1,000 on Monday of this week, and about another 400 piling it in. So about 1,400 of some, shall we say, yeah, I guess they qualify as lottery tickets. Those are pretty far out there. So some par calls, some double calls, all kinds of crazy stuff lighting it up this week. Mr. Nick, what caught your eye out here in WTI this week?
Well, I think most important thing that we should discuss is talk about the weekly option activity that we had. And if you were paying attention, hopefully you're paying attention. If you haven't been following us on Twitter, why not? You might as well. When we have important events that are happening throughout the week, I try to be fairly active on there and put out some good information that you can and cannot see on the free stuff. So try to keep you interested in watching and viewing along. But big stuff. As you know, we had the week 4 contract expired at 1:30 today, 1:30 Central Time. It rolled off, but I unexpired it so we could see it during the show. So it's still going to show up on the CME Group site, at least for the remainder of the show. And what's of interest there? So we had yesterday we had an increase almost 300% in open interest. So that strike that expiration in particular got almost 13,000 open interest, and the trade this week was really pretty significant when you look at it. Just in terms of the activity in comparison to the activity we've seen in weeklies in the past. So I think the good news here is that people paid attention, knew a weekly was out there. It was fairly well publicized. Even embedded in the CME Direct platform, there's an informational link out there that talked about managing OPEC risk and talked about the weekly options. So hopefully people will start to pay attention and see that those were very liquid. I was watching, they were even today after, I was watching Wednesday, I was watching Thursday, before, during, and after the meeting, the markets were fairly tight. There was trade today as the market rallied from like 49.30 up to 49, 65 or 68, whatever it was. So, you saw prints going on, even till I got back to my desk about 1:15. I don't think much was trading just before the close there, but there was trade well into the day today, because it looked like we had a chance of maybe pushing back toward the 50 strike. But we didn't make it quite there, or at least not before that expired. We're at 40. I think we closed at 49.80. So that was really the big one for me, was paying attention and watching to that. And you saw trade all the way up to the 55 strike, and trade in the 52, 52 and a half, and 53 strike, and 48, 46. 45 all the way to the 50 or the 51 put. So really good activity. I think CME's probably going to be really happy about that. It was an open interest and volume record, I think, yesterday. So all good from that standpoint. Now, I think we talk about why don't the weeklies trade? Why don't the weeklies trade? Well, this week is a great example of why they trade, right? Because you mentioned it. There's event volatility, and no better way to capture the event volatility than look at as closely dated expiration as you possibly can, and that seemed to work out very well. And I'm going to imagine that the next meetings or events that occur on Thursday, Friday, we're going to see the benefit of those in the weeklies. Now, that doesn't bode so well for the coming weeklies, because there's probably, as you can tell by looking at the report, a couple things. So, volatility's off quite a bit. And I fear, Mark, that with this, even though we're getting these 5% moves, we're getting these moves internal to our range, right? So we tested down a little bit this week, and then we came back up. So now, if we look back at if I just pushed something, I pushed 2017 total open interest by strike out, and if we look, we have sort of our fulcrum, or not our pivot point is really the 50 strike, and then we had support at 45 and resistance at 55. So I think yeah, we're going to see a continued range for now, especially given, the time frame, like you said, is about 9 months. And people aren't going to be too optimistic about an upside move, at least. And, maybe the preference, and I think we'll take a look at quick skew and see that people are going to look more to the crude continuing to slide down. And one thing that we should probably mention is last week, Matt was on, and he said that he didn't think it would get over 52.50, and I think he was right on, right? I don't think we ever got to that point from a futures price during this week. So anybody who traded that 52.50, 48 or 47 half strangle probably ended up doing okay. As far as other interesting stuff happening out there, as I mentioned, July's got about 20 days to expiration. That was in quite a bit, 4 vol points, and the rest is about anywhere from 2 to 3 volatility, and that's expected, right? We priced in a lot of expectation this week, and then when that expectation, whether it would have hit or not, unless we would have hit it and continued in one direction or another, the vol was going to come off more than likely anyway. So we see vol in. We saw a really good bump in open interest, almost over 8.5% across the board. There were some good openings in strikes this week as well, given that the weeklies were trading a very wide range. And that was really another interesting thing that we see here. We saw basically, if we look at the contract that expired today, the trade was really wide ranging, almost down to the 40 strike all the way up to the 57 strike. So you're talking about there was some activity, and the width of the trade there really shows you that the liquidity is increased this week as stuff was as the event was taking place and as people were paying attention. So that's sort of some of the big notice there. If we look at the quick skew, because we're always trying to talk about the quick skew, we'll notice that the skews themselves didn't trade. The regular risk reversal skew didn't change that much. July and August were pretty flat. It was about 0.5% change or less for the rest of the calendar year. But what we see in the quick skew is we see that outside of the July, the calls got cheaper and the puts got more expensive. So I think we're gonna see that we're testing this upside. We're not able to do it. We see a little bit of downside. We see a lot of activity as the futures move lower. So it looks like we're back to the old curve shape that we had before, where puts are bid and calls are offered, and we're going to just have to, and it's fairly significant. If you're looking at these numbers, there's a big change just from last week. And I think next week with the short week, and if we trend, we might see the same thing. So that's what I'm seeing right now. Mark, I don't know, you got anything else that's of notice that you saw while I was talking?
Well, I'm just kind of taking the pulse of the audience. I like to see what else they like us to talk about. We talk about crude, and certainly crude merited it this week, but we like to mix in some other products as well, and we're asking people on a variety of platforms what they like. And Nick, they tend to be pretty one note when it comes to the products they like. They like gold and they like their crude. And we asked them again this week, and they said gold once again. So what do you think we're going to talk about next? I think we're going to talk about gold, sir. If you're up for it, can you handle a little gold analysis?
Yeah, I can. I didn't pay attention too much, but I think I'm going to jump right into Twio and
that's the fun thing about the quick strike, right? You just select metals, gold, and bam, head on over to cmegroup.com/Twifo if you haven't done so already, and you can follow along with us. Yeah, you guys love your gold. I gave you ags out there. I gave you even some silver and some other stuff, and no love for corn, a little bit of love for beans, a lot of love for gold. So that's where we're heading, listeners. If you got some of the crazier product suggestions, hit us up. We do love to hear from some of you guys out there as well. But what was lighting it up this week in gold? Another, you guys probably who follow this, the gold bugs out there, it was kind of rally ho net on the week, ending up about 15 handles out there in the futures, about 1.25% out there, hovering right around the 1270 or so line out there right now. So a good week for the gold bugs out there. And of course, gold's a little bit of a weird story. I've said it before on the show, and Nick will get into this a little bit more when he breaks down the quick skew. But the gold skew has been one of the more interesting volatility skews to watch week on week, month on month, because it evolves so quickly. Sometimes intra-day, we see just everyone's got to have it, and the calls are super steep. So when we rally like this, we see vol actually shooting up, which is the polar opposite of what you'd expect in a lot of products like a crude or certainly like an equity or an index, because they typically have that investment skew type shape, which is how Crude has been shaping up a lot lately as well, but gold not so much. And all of a sudden, the puts can get bid the next week, and we could sell off, and we could see vol going up again, and then we could see a rally, and the vol comes off. It's all kinds of interesting things going on out there. So you like to watch just the evolution of a skew. I think gold is a really good place to go, give you a nice basic framework for how this stuff works, and more importantly, perhaps, how it impacts options pricing and strategies and performance and things like that. So what does all this upside mean for this week? Well, we saw a little bit of a sell-off out there, about a point or so from a vol perspective. So that clearly means the calls are not as rich as they once were. Still some juice to them, but not quite as rich as they certainly once were. And what was lighting it up this week? Well, it wasn't in the weekly so much. It was a little bit farther out. It was in that front month July contract where the lion's share of the volume, slightly under half, about 47% of the overall action. You guys in crude and in gold, you like your front month. You like just getting up there and really mixing it up in those near-term contracts. Again, not so much in the weekly, so I'm not sure why that is out here this week in gold, but tons of action, out here in the front month. Let's start off, once again, kind of like in crude where you guys tend to like your 50 strike and kind of tend to converge around there with your liquidity. Gold tends to follow suit. We see this rally, so surprise, surprise, get up to about 1270 or so. So the round numbers are where the action was. In particular, it was the 1,300 calls leading the charge with about 100 contracts. The lion's share coming yesterday, about 3,000, about half of that volume coming up yesterday, and a good chunk of that opening this week. So some opening upside call volume. Gold bugs out there leading the dance once again. Followed, surprise, surprise, round numbers, the 1,200 puts. So the bears right on their heels, about 4,400 of those trading this week, including 2,000 on Thursday. So Thursday, the big gold options day out here this week. Monday, also pretty active, about 1,100 of those puts also trading. And again, the lion's share of those, at least opening mostly on the week. So some interesting action. There was some back and forth on that strike as well. So I'm guessing some people were giving up on that 1,200 strike as well. I can't imagine there were too many opening put buyers on the 1,200 level, but then again, you never know out here. Then we fall off a little bit again to 1,275, another nice round even number everyone can kind of sink their teeth into, with about 3,300 of those, including the lion's share actually coming today, about 1,300 of those lighting it up today on today's last minute kind of rally out here. So interesting stuff out here in crude land. There was some action a little bit farther out as well, all the way out here to indeed SEP, where we saw some nice little action as well. The 1345. So if 1300 was not optimistic enough for you gold bugs out there, well then some SEP 1345s may attract your attention to the tune of 4,700. So they were actually fairly active out there this week, with including a good chunk going up today. About 3,500 and 1,200 on Tuesday. Didn't really trade much the rest of the week. So two big chunks, two big blocks going up on Tuesday and today. Again, the lion's share of that opening. Looks like 1130 is also pretty active out here in SEP, a deep in the money call strike. So that's kind of interesting. Maybe a bit of a roll. No, the open interest is opening though. So open interest of opening of 4,351. All of that opening on the deep 1130 strike, which is a bit of a head scratch. I'll have to dig into that one a little bit more as we move on with the show. Maybe Mr. Nick has some more color he spotted on that. I like to look at the longer term stuff as well. So the D's and into the D's of 2018 and even June, and not so much. Only 4 contracts trading, leading the charge out here in the 1265 puts and D's 2018. So usually we see some stealthy call buyers out here in that part of the term structure. This time, not so much this week. So maybe they got spooked out by some of the earlier rallies and they're kind of biding their time. Or maybe they already put on what they wanted and they're playing the wait and see game. Or maybe they're loading up on those 1345s and set. They're getting a little bit closer to the money, or a little bit closer to the fire, I should say, in the terms of the front month. Either way, interesting stuff. Mr. Nick, a lot lighting it up out here, including some head scratch and paper in SEP. What caught your eye in the quick skew, as well as what else was lighting it up out here in the hot options for gold this week, sir?
Yeah, I don't have any color on that SEP, but I'll go back and take a look at the block trades when I get a chance here and see if we can find something that gives us a little bit more of an idea of what happened on Tuesday with that goofy trade. It'll be, if it's a block, then maybe it's more than likely, like you said, a head scratcher more than anything else, or maybe somebody was shifting something. But let me see if I can find that out. That was the 23rd, I believe. But we'll take a look at that. But I'll talk to what I saw in terms of the quick skew and volatility and that type of thing. So again, looking at if we look at the report, we're going to see that volatility is down again. And looking at the action of the future contract itself, it was a nice little mini, like a Kittyland roller coaster this week. We had $10 up, $10 down, $10 up, $10 down. So there was probably some trade there. So I'd imagine anybody trading the future likely had a good week trading the gold today. At least it looked like it was enough of a movement up and down where you weren't getting too stopped out with the movement down or the push up. But all of that gain on the week basically is coming today, right? So we were 1254 or 1250, whatever it was, up to 1272. So it was basic. We had a sideways moving little bit of a mini roller coaster with the big upswing occurring today. So, but if we look at it just from a long-term standpoint, right, we're sort of in the top third of a range that we're used to seeing. So what does that mean? And I think it's a commodity issue in general. We're now, and I just tweeted out a 3-year, 30-day, and 60-day constant maturity volatility chart. And the July is a 32-day about a 32-day contract. Will be about a 30-day contract next week. And the August right now is a 60-day contract. We're at our lows in 3 years, and I looked after that at the 5 year. So the constant maturity, those 30 and 60-day contracts, they're at lows over a handful of years. So I just. We talk about it all the time. You get to the lows. Yes, it could go lower, but at the same time, it's pretty low. Stuff's pretty low. You're talking about not that much volatility in the market right now. And it seems, and I will take a look at the rent as well when we get a chance here and see if we're paying the rent on the gold contract from a movement standpoint, if it's on my pop-up. And we had as far as the volatility and how much the underlying was moving, definitely was worth owning the options this week as well. And we'll have to, again, I keep saying it, so I force myself to do it at some point. We'll get the rent report out there, or who's paying the rent report out there, as soon as we have a little bit of time to put something useful together. So vol was low, lower still, lowest we've seen in 3, 4, or 5 years. If you're looking at the 25 Delta risk reversal column, not much of a change there, 0.5%. But when we look at the quick skew column, we see that the calls, outside of, say, once we get, in general, the calls got hit a little bit, so they're not quite as rich as they were when we began the week, and the puts are not quite as cheap as they were. So a little bit of flattening of the vol curve toward the at the money on the downside, and same for the call side. So still have, and when you're talking about a 10% volatility, you're really not talking about that big of a spread between the 25 Delta put and the 25 Delta call. So you're really, as much as those numbers are significant from a numeric standpoint, from a percentage standpoint, right? They're not there. There's not much going on there. So we have a pretty flat curve. So still, or a smile, but a little bit of a crooked smile, but not so much where it looks skewed one way or another, or too much of a skew. So still in the middle of a range, not quite sure where we're going. I mean, this is one, right? We talk about all the time. There tends to be a bias where people want the commodity to move up, and there still looks like that's the case based on how the quick skew numbers look. But at the same time, we're trading in the range, and seems like it's worth having a at the money straddle here, even at this low volatility. It's moving around enough you can scalp. I don't think you're going to get hurt that bad.
Yeah, I think we'll get some of those, the rent reports. We keep talking about doing these segments. Maybe I'll get them set up, have a nice little drop ahead of them. Who's paying the rent, crazy trade of the week, all that fun stuff that we always like talking about here on the show. We'll encapsulate them into the format a little bit more. Meanwhile, though, listeners are hitting us up, Nick, so we can't keep them waiting too much longer. Let's get into some futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Like the man said, time for your feedback. Time for you guys to take the reins and tell us what the heck you want to talk about. And a lot of you guys doing just that. We got a question here from Olive Trader 1. He says, during the last show, so this is last week's show, we had Matt on from RCM Alts. He says, during the last show, you mentioned defending a straddle. That means buying futures as soon as we are trading under the put and then selling futures as soon as we are above the call, or is there more room for execution? Well, good question, Mr. Olive Trader. And yeah, there's a lot of room here. Let's just break it down a little bit what you're talking about here for people who may not be familiar. The concept of what we're talking about, what we were talking about when we said defending the straddle on the show last week, was effectively a concept called gamma scalping. If you're not familiar with gamma, I encourage you to maybe check out our options bootcamp program. We break down the options Greeks in a great deal of detail there. But basically, you got your delta, gamma, theta, vega. Delta being your options price sensitivity, how much the options price changes with movements in the underlying. Gamma is the rate of the change of that delta. I know it's a little bit obtuse, Greek of a Greek, but that's essentially what you're doing, because you have this, let's say, an at-the-money straddle. The underlying rallies a little bit. Your call is going to get a little bit longer delta. So you're going to get more long deltas as a result. So you can, in fact, sell them. And then if the underlying retraces back to the at-the-money strike, or maybe even below it, you buy it back, and there you go. You're scalping the underlying. You mentioned futures, but you can do it with stocks. You can do it pretty much with any underlying that you're thinking about. And now, effectively, what you've done is, in that sense, you've defended your straddle, because the straddles have two options, usually on the at-the-money strike. That means double the decay, double everything else. It's a lot to really make up. You could be very right on direction when it comes to buying a straddle, but still having, at the end of the day, or right on vol, but if it doesn't happen in the right amount of time, your decay is just going to eat you alive. So that's why we say you have to defend those pretty aggressively. Now, you say here, is there more room for execution? Yeah, when it comes to gamma scalping, this might be the most subjective and the area of options trading where the art meets the science perhaps the most. I mean, you ask 50 different options traders how they scalp gamma to defend their positions, you'll get 50 different answers. It's that variable. Some will use in-depth technical analysis to choose their levels. Others will use fundamental. Others will use, the volatility and the skew to set up where they want to do this. It's very, very. In fact, I had a good conversation a few weeks ago at the Options Industry Conference with someone who talked about how they used to set it up on a bunch of different equity options, and they had a different system for every equity option they traded, because everyone had its own skew and they had their own underlying mechanics that drove that stock. So as that variable, it's down by the different underlyings. You can't just go with one system and apply it across the board. So it really is very much a personal thing, how much room you want to have to run. Oh, I sold it too soon. I should have let it run a little more. I cost myself some money there. Oh, I waited too long. I didn't sell it fast enough, and now I missed it, and now it's reversing. I missed my chance to scalp. That's happened to all of us. It's very much a difficult. It's not much of a science there. It's very much art, and so yeah, there's a lot of room for different ways of execution. But you captured the basic premise of it. You have this straddle, underlying rallies, you're getting long deltas, you're going to sell them, underlying retreats again, at least that's the plan, that's the hope. If it keeps rallying, well, you're kind of screwed. You got to sell some more at the upside and hope you can come back, because you kind of wasted that run now. You sold the deltas a little bit too soon. But in a perfect scenario, the underlying rallies, you sell it, the future comes back to the at-the-money, you buy it back, there you go, you scalped half a point or whatever the case may be, and there you go. That goes to offsetting your decay for that day. We can probably do 2 hours, Nick, on gamma scalping. But do you have anything to add here for our friend, Mr. Olive Trader, who's a little confused on the concept of gamma scalping and using it to defend a straddle position?
Yeah, I think the only thing I would add is about the artistic part of it, right? You wouldn't want to, the whole thing is you wouldn't want to start defending it right when it gets just below or just above the strike. The whole idea of that is you want the deltas to build up a little bit, so you get some benefit of purchasing when it's low or selling them when it's higher. So it really does become a matter of being comfortable with the futures ranges and knowing, having a little bit of an idea of where you think you'll do it. And then also being patient about not necessarily covering all your deltas when you move a certain amount past the at the money on the downside or the upside. A lot of people will do a percentage of, they say, I want to cover all of them once I move this much of a percent of the current premium of the straddle, right? Because then they're starting to figure out how they're going to get the premium that they paid back. And if you think about it, when I was at O'Connor Associates, one of the cool things they taught us, like if you think of the straddle as basically, a parabola that's facing up, and a parabola. So if you I know maybe we're getting too mathematical, but if you did the parabola that was y equal x squared, it would be a parabola that sits at the 0, 0, a vertex is there, right? And then it's cupped forward. Then when you buy a straddle, you're basically pushing that parabola down below the 0, the 0, point, and that's the premium you pay. And as you scalp, what happens is you move left and right, and as you take advantage of the futures that you're buying low and selling high, that cup, you start to let some of the water that you filled in basically with premium, it starts to come out of there because you're getting your money back until that parabola is again at 0, 0, and then it moves higher as if you are actually making money beyond the premium that you paid. So that's the idea, and you don't want to do it too small increments, because then what if you could easily move through a purchase that you make if you just buy something just as it moves south of the strike, and the same thing for selling on the upside. So you gotta if you're trading options, you gotta be paying attention to the futures. You gotta have a good idea where you think futures levels are, what ranges are, and that's how you're going to at least, it's a very nuanced thing, and we've all made horrible mistakes with our gamma, both missing it and doing too much at a particular strike. So don't ever feel bad about making a mistake, because anybody who's traded and managed a position that had a lot of gamma in it, and I tend to like gamma, we've all had many tears that we've shed for stupid things that we've done. Anyway, on top of that, I tweeted out what a gamma chart looks like, and I did one for the July gold, so you could take a look. And as Mark said, I think there's a question coming up here. Gamma he mentioned the derivative was a derivative of delta. So if you think about it, if you just go look at a pricing sheet, or you look at a calculator and you put like a 30-day option in there, and then you just fluctuate the future around the at the money strike, you're going to see how the delta is going to move fairly significantly, and it's going to move more as you move toward expiration, because the gamma gets a lot more aggressive and narrow as you move towards expiration, and a lot less aggressive and flat as you move out in expiration. But we have a nice tool called Quick Options Chart that's in Quick Strike that you can take a look at and learn a little bit about the Greeks, because it'll chart them for you, and you can change the future volatility in the days to expiration to see how that how the magnitude as well as the breadth of the values changes with time.
Yeah, we're getting a little wonky here, but that's always happens when you're talking gamma, right? You can't really do it without getting a little wonky, but hopefully we're not over your head. If you are over your head, listeners, again, check out Options Boot Camp. We break it down, that show, in a lot of detail, as well as Options Playbook Radio, 2 shows really designed to explain these concepts to you in a little bit more bite-sized and easily digestible chunks. We're kind of hitting them on the fly here. But that question you mentioned came from Javier LBC in our chat. He wanted to know if gamma was a derivative of delta. Nick has that great chart. What I meant by that was saying, it's not to get too wonky again, but gamma is effectively what's called a second order Greek, which means effectively all the other Greeks, your deltas, your vegas, your thetas, are measuring some change in the options price. Gamma itself is actually measuring the rate of change of another Greek. So it's kind of another order, a second order. It's a whole kind of different animal. And we don't really talk about, there's a bunch of other ones out there. Gamma, for some reason, is the only one that really makes it into the common vernacular. But it's only one of those main Greeks that really measures the rate of change of another Greek, which is why it's kind of obtuse and a little bit off-putting for people who first come to options. Like, what are these guys talking about? This is kind of head-scratching stuff. Again, if you're in that category, check out Boot Camp or Options Playbook Radio. They'll cover you. Our friends over there at CME Group, they have that great CME Institute over there now. You can go check it out for yourself. They do a lot of great options education. Used to be the Futures Institute. They've upgraded it. They got options now, too, so you can go check it out over there as well. All right, we got a comment here from FContangotrader. He's talking about what we want to hear. People want to hear about on the shows. I can't wait to hear about corn. He says, rain makes corn and corn makes whiskey. Maybe he's been imbibing a little bit. I feel you there, Mr. Contango Trader. You like your whiskey. I'm going to assume you had a few beverages already, hence the spelling. But yeah, I'm with you. We don't get a lot of, I try to put it out there, don't get a lot of corn love. People don't want to hear about corn. Maybe you're the one. So if more people want to hear about corn, let us know. We'll break it down. Here's a nice one. Mr. Nick comes from, I like this handle, Bobster. The Bobster. The Bobster says, can you trade options outside of U.S. trading hours? Well, he came to the right show, didn't he, Mr. Nick? Because if you want the extent, this is a hugely controversial area in all the traditional equity and index space, usually where it's pretty much your traditional trading hours, and that's it. There is no after hours for options. But in the world of futures, you get a little bit more, you get a few more options, pun intended. Why don't you walk them through, Mr. Nick, exactly what they can do? Because most of these products are, if not 24/7, they're, from the futures at least, they're pretty active, so you can at least get something off when you wake up in the middle of the night and you're like, oh, I need to do something. That you have a better option there than you do in, let's say, your traditional Facebook option, something like that. What do you have to say from Mr. Bobster, Mr. Nick?
Yeah, that's for sure the case. You get a little bit of a closure around 4 o'clock Central Time, so the systems roll from one day to the next, but you are more or less trading 23.6 or about 23.5 and a half, because you start Sunday night at 5 o'clock again. So Sunday 5 all the way through Friday at 5. I think Globex is still might still be up now, even because the S&Ps are still open. So I think it's open until like 4 o'clock. So yeah, you have the ability to do quite a bit on the CME. And if you're trading where you should be trading on these futures options in the first 3 months, the markets are tight, the liquidity is good, and there's always somebody out there. If you watch these guys that I see that I talk to on Twitter or follow them, they're trading. People are trading all night long. Get up early and stay up late. Maybe get a workout in between the close. But yes, there's plenty of opportunity there, and all of the benchmarks that the CME has, those are all really pretty liquid and very, very good markets for you to trade.
Speaking of markets to trade, Bitcoin. Everyone and their mother wants to know about Bitcoin. This actually, I should put this with the other one. This is the same guy. I usually limit him to one comment or question to show, but he snuck into. Good for him. FContangotrader also says, we talked a little bit about last week. We had a listener question writing in about what's tradable from a Bitcoin standpoint. We mentioned how CME's filed some patents to add more products and to use also blockchain on things like having essentially a digital gold and things like that. So that technology is coming, and those products are coming right now. It's kind of frustrating if you're used to like a deep liquid listed options market here, trying to go trade a thing like Bitcoin, which is wider. There's multiple venues. Some of them are more reliable than others. The spreads are wide. It's just a difficult place, and certainly there aren't any real options from a deep and liquid perspective. So yeah, F Contango says, I can't wait to start trading options on Bitcoin. I'm with you. I would love that too. I think there's a lot of not so much Bitcoin, just new products that people are excited about. At the options conference a couple of weeks ago, there was a lot of hand wringing. Where's the new volume coming from? Where are we going to get new players, new entrants? How are we going to get millennials into the space? So you start dangling Bitcoin options in front of them, that's going to attract a lot of people. Now, some of them will get run over. It's a pretty volatile product. Hopefully, you have a nice deep liquid market kind of backing it up that will help backstop some of that. You won't get quite as run over as you will in some of these crazy, effectively OTC markets that they have now. But that said, that'll be interesting. I think it opens up the door to new players, new traders. It is effectively a commodity at the end of the day, so it makes sense it would have a deep, liquid, robust derivatives market floating around. How about you, Mr. Nick? You kind of touched on this last week a little bit, but people love the Bitcoin. You feeling the love here that our Contango Trader and others have for Bitcoin options, or are you dreading the day that they are listed?
Well, I think it's even up since last week, and I believe that chart I put out last week was a few days old, and even from that few days old, it was up even more. I think it printed like 2,800 or something this week. It's just crazy, and I think it's basically an index, right? So it's going to trade like an index. It's going to be easy to track. CME's got two. They have an index, and then they have two numbers that we'll be putting out there pretty soon that'll be available for free, because we're just going to be pushing the data that they're showing. And if you go to cmegroup.com on the homepage, they do have a Bitcoin box that's going to show you the values. I think that, of course, everybody's looking for new stuff to trade, and simple is the wrong word, but it's easy to look at, right? Because you're talking about, it's a number, right? And everybody could look at a number, just like that's why people like the minis, right? Because it's a number. But I think it's, if this week, this month, this last half year, this last 18 months is any indication, it'll be interesting to see, because I imagine it's gonna whip around. It's one of those things, right? I mean, if you were fortunate enough to buy it a long time ago and you got in cheap, and now it's 2,800 or whatever it is, do you sell it? Do you keep it? Do you sell half of them to get your money back? Do you sell enough to get your money back, and then or do you just wait, or is it going to half in price? I mean, it's kind of a scary thing. It's a lot different than commodities, because those have some fundamentals associated with them, at least, right? Something that's going on that is sort of globally trackable, or that people are talking about, where the Bitcoin is more of a speculative, sort of almost like a gold rush type thing, like we're going to go mine this stuff. So that part I'm not really sure about. And one thing that makes me nervous about it, and I'm sure it'll all get taken care of, is that I just don't really understand. I read a good free book that Amazon had. So anybody out there, if you go look, there's like a 40 or 50 page book that you can read that gives some good insight. But I'm more curious, and I think they have like Bitcoin exchanges where you can, trade in for your cash to get your cash money back. So that's really, until there's sort of like something that's very transparent in terms of where I can go to get my money, and I'm sure maybe that's already out there. I'm just not aware of it. That's why I'm sort of still kind of uncomfortable with it. But yeah, I think all the exchanges are pushing, and a lot of different products are coming out there to track this. So I'm sure it's going to be very popular, and it'll hope. I mean, if it's volatile, it'll trade. I mean, put it this way: you don't even have to buy the Bitcoin. You could just trade the options on the Bitcoin, and you could have it could be really interesting, and especially when you're talking about gamma. In this case, a moving market's going to do a lot for the gamma.
Yeah, and just think about the use case you just outlined. It's such a perfect use case for options. You got a product, an underlying that's super top heavy. You're concerned, but you kind of still want to hold it. How great would it be to have a listed option with it? You can buy a put on it. Then hey, you sleep at night, but you still have your Bitcoin, right? So yeah, this is a perfect use case for one. We see this kind of similar analogy now in the broad equity indices, where they're getting a little top heavy, I guess, depending on your view. Nice to have a nice little put in your back pocket, or a put spread to offset some of that fear, so you can sleep a little bit at night. I'm sure people out there in Bitcoin land would love to have something like that was listed and deep, and had OTC, had central party clearing, I should say, and had a lot of people backstopping it. It wasn't some crazy OTC product someone threw together, and that would certainly, I think, go a long way towards alleviating some of those fears and probably driving more volume. It'd be nice to see out there. So yeah, I'm with you. All the people are writing in about Bitcoin. I'm with you. I'm on the train. Let's have the train pull into the station, and then we could see how it goes from there, how it rides on the rails. Let's see. This kind of refers back to what we were talking about, Nick, with the gamma scalping a little earlier. This one comes in from LV56. He says, I'm mostly trading futures intraday to scalp a few ticks, primarily S&P, crude, and gold. I'm interested in options, but I don't see how to apply them to my trading style. Is there a way to use options for very short-term intraday tick scalping? We get hit up on this show, and particularly on this kind of question a lot. It comes in every couple of weeks or months or so, which is there's a lot of people out there who are using futures like this guy is to scalp really small moves in the underlying, a couple of ticks. And, futures are great for that. Futures were designed for that style of trading because they are the underlying. They're Delta One products. They move tick with the underlying because they are the underlying. So it's a great way to scalp a tick like that here or there. And people always hit us up, how do I use options for that? That's not quite frankly, a great use case for options. Most of the products are longer duration. They're a week or if not a month or longer. So if you're going to buy a meteor option that goes beyond a month, not too useful really to scalp small minute moves in the underlying. You really need, that's one thing we always talked about, particularly on long premium, which you're going to be here if you're going to be trying to scalp anything. You'll be primarily leaning long premium. You need a nice, aggressive, sharp move to make that pay off. And a small, a couple of ticks, a few cents in an underlying here or there, it's not really going to move the needle enough, particularly when you start going through by the time you get commissions and ticket charge to put on the trade and then come in and take it off. That's a perfect. I mean, we don't talk a lot of underlying here, but that's a perfect use case for futures. I'm not averse to that at all. If you want to start now, let's say having a little bit longer term positions, like Nick was just alluding to, maybe you want to hedge those. That's a good use case for options. You want to generate income on a longer term position. That's a great use case for options. You want to start collecting, your own little dividend income stream on XYZ underlying. Go ahead. Great use case for options. A lot of great things you could do. You want to spec on volatility. That's a longer term play. Options are usually involve volatility in some respect, unless you're talking very, very short term contracts. And that volatility takes time to play out. It very rarely, aside from big event days like the OPEC day or an earnings announcement, very rarely does it play out intra-day in very dramatic fashion. You need a little bit of time for volatility to play out, and that doesn't usually happen tick by tick intra-day. If you want to do that, you really have to get into deep, meaty, in-the-money options. And at that point, you might as well buy the future because you're buying an expensive option anyway. That's going to have to move somewhere close to a 99 delta to really get that movement you want. So you might as well buy the future. I don't know, Mr. Nick, do you agree? You're going to take the counterpoint. We're going to have a vicious argument here.
I think that to answer the question, you can. There's going to be good reasons to do both, but I like, he said it himself. Short-term intraday tick scalping with a shorter day, with a shorter option. We saw it this week, right? I mean, when you start to look at 1, 2, 3, 4, and 5 day options, here's the thing. It's actually worked out very well today in terms of the whole conversation. Short dated options have higher gamma values, which in turn makes the delta move more like a future, right? So really, when you start to move into these short-dated options, you're trading things with a very high delta, which is very similar to a future. So you might be, you have an at the money. At the money is always going to be 50 delta for the most part, but it moves down a little bit, it's going to turn into a 30 delta. Moves up, it's going to turn into a 70. So you're actually getting some if you have a call, you're getting some activity or some movement in the price of the option that's very comfortable for you, that looks and acts and feels like a future. So yeah, you could trade the futures. The options, I think you have a little bit more leverage, right? You have a little bit less margin, I believe, probably, especially when you're long options. So that's something to consider as well. So I think, and that's why the weeklies are there. The weeklies are not only there from a hedge perspective for people on the short term and for capturing the event risk, but also from a trade standpoint, right? Because they're low premium, so they're easy barrier to entry, and they're fairly liquid. So I think you have some good opportunity there.
Yeah, that is a good use case for weekly. I mean, if you are going to play this way, you're going to have to play nearer term. If you're not going to buy 3 month, 6 month, 1 year options trying to scalp intraday, that would be a poor use of time and money. The one thing you have to obviously be cognizant of when you're doing that kind of stuff with the weeklies, we mentioned the gamma. The flip side of gamma is theta. High gamma means high theta, means they're going to be decaying. So a lot of people like to sell these things. If you're buying them, just be aware that you need that move to happen fairly quickly. Otherwise, you're going to see, wait a minute, what's all this erosion happen? Particularly if you're buying, let's say, out of the money weekly contracts, which a lot of people like to do. And then you need that really sharp move to really get the ball rolling. Otherwise, by the time it happens, it could even be intraday. That erosion happens intraday on the weekly. So if it doesn't happen within a few hours of putting it on, you're going to be under the 8 ball. So just bear that in mind. But yeah, that is a use case for them for if you want to do. That's why it seems like there is more popularity in these very short duration contracts, because they do tend to help facilitate some of this type of trading. But at the end of the day, still, if you just like 1 tick, 2 ticks, small stuff. There's nothing shameful about slinging the underlying. We are This Week in Futures Options, but we don't look down on people who are slinging the underlying. All right, everybody, that was a lot of great questions. We actually have more here. We don't have time, I don't think, to get to too many more here on the old show. But we do love your feedback. Hit us up. Keep hitting us up. We read them all. We'll respond to you offline if we can't respond to you on the show. I think we can save some of these for next week. On top of all the other ones I'm sure we're going to get next week. Keep hitting us up. We love your questions, your comments. You got a weird product you want us to break down? Let us know. Hit us up. We'll talk about it. as long as it's got more than 5 contracts or so trading, that's our barometer, then we'll see. Maybe it's something that's not on our radar that we should be looking at. Let us know. Hit us up. We'd love to hear from you guys, all the usual places, at Options, Twitter and Stock Twits, Options Insider on Facebook, questions at the Options Insider the old-fashioned way by email. It's all baked in the mobile app. Of course, if you're listening live, you can use the live chat as well. No shortage of ways for you guys to reach out to us on the website as well, theoptionsinsider.com. Click on the website feedback form there, and you can fill us in with all of your thoughts and questions there. We'd love to hear from you guys, so hit us up. Before we go, Mr. Nick, what is cooking? You guys are always working on cool things over there in the land of Quick Strike. What's coming on the pike in addition to the cool live links you added for our live listeners over the last few weeks?
I think, what do we got out there? Let me think about it. So if anybody's in the subscription, we put out our new version, and you can really hone in on what you like by creating some shortcuts and favorites that will make your experience that much more pleasant. And we have a new treasury tool coming out in about a week and a half, which will, if you're trading the 10-year or the treasury spreads, you'll get some benefit out of the report. That's going to be available on the website. And then after that, I think encouraging people to continue to take a look at the free stuff. And if you're looking for a trading platform or aren't happy with your trading platform, take a look at CME Direct, because there is a very nice integrated version of Quick Strike available there for free. And it has a lot of good tools that I think you can benefit using them while you're looking at the live stuff going on in the platform itself.
Well said, sir. Check it out over there at CME Direct. And of course, you can check out that page we mentioned from our friends over there at CME Group. It's live all week long, every day. Middle of the night, you wake up, you want to know what's going on in the metals or something, CMEgroup.com/TWIFO. You can do it. It'll give you, from wherever you're looking at it, it'll give you the week from there. So just check it out. If you want to change the settings on to look back at the previous week or something like that, you can do all that too. So if you want to see exactly what Nick and I were looking at the time of the show, you can do that. Just change the settings to previous week, and you got it covered. It's there for you. And while you're over there at CME Group, if some of the stuff we were talking about today was maybe a little over your head, or you're confused, or you're just interested and want to learn more, CME's got that great institute over there. Don't search for CME Institute. So go to institute.cmegroup.com. That's the place to go, and you can pretty much, they have all sorts of great introduction to equity index options here now, all kinds of great options content here. So not just the Futures Institute anymore, a lot of option stuff in it as well. So if you want to get into all that stuff, talking about gamma, delta, theta, vega, all that fun stuff, get over there. Get your learning on, as they like to say. And it's all free, which is, you can't beat the price. All right. And on behalf of Mr. Nick and our friends over there at CME, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing, and of course, for tuning in all week to all of our shows, not just TWIFO. We love all you guys. And we're off on Monday, so no option block on Monday, unfortunately. Don't blame us, blame the markets. But we'll be back for the rest of the week for our interviews and for our shows on Thursday. And, of course, for more TWIFO next Friday. So have a great holiday weekend. We'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.